So I've been getting many messages and emails from people that I personally know and also strangers on the internet. And the main story revolves around the same context. Is it time to give up on Alibaba and also China as a whole? So the short answer is no. The long answer, remember to smash the like button and still no. So for investors that have been quote unquote stuck in your Alibaba position or any Chinese position for that matter, can I propose that you engage in this activity with me? So take out a piece of paper or just whip out your iPhone or your iPad or whatever and go under the notes section and answer these 3 quick questions for me. Number 1, how are you feeling right now? Number 2, why do you think you are feeling this way? And number 3, how could you have improved your process from here on? So I'll go first. To question number 1, I'm actually feeling quite excited to be living through these crazy times. And I cannot ask for a better experience, especially because I'm still in the accumulation phase and I'm relatively younger than a lot of the other people here. Also, because I will still be looking forward to buy equities in the next 30 years or so. So I'm even happier to get cheaper prices. That said, it is definitely regretful that I deployed my cash a little too early on, but don't misunderstand, I'm still buying at today's prices. But of course, as greedy investors, if I bought in much later, my costs would have been much lower. So having an average price on Alibaba at $60 today, especially for investors that just came into the stock, that would have been heaven. That said, I doubt new investors would even bother touching Chinese equities in this current climate. Most that are still buying are probably backholders like myself and have entered probably much earlier on. For those of you who are unaware, there is actually a limited time bonus in lieu of celebrating Mumu's 10th year anniversary. So if you open an account and deposit any amount on Mumu, you get an extra $10 on top of the other welcome rewards, which might be worth up to 190 Singapore dollar if you deposit minimally 2,700. So Mumu is a great platform for you to trade and also invest in the stock market, and they have been a solid partner for my own investing journey thus far. Currently, I know it's the big tech earnings season, and many of you are losing sleep over it because these big tech companies essentially set the tone for the rest of your portfolio companies. So fear not, in Mumu's native app, you can actually keep track of all these different earnings via their earnings calendar and be kept in touch via the notifications. Of course, for those of you who haven't signed up, don't let welcome rewards worth up to $200 go so easily. I will leave the link in the description down below. For my US and also Australian viewers, Mumu is also running aggressive reward campaigns, giving out free stocks as well. Just make sure to click on the correct link below. Thank you Mumu for sponsoring this video. To question 2, I probably underestimated how intense the sell down would be, especially for so-called market leaders or even dragon head companies. In Chinese, it's long toe. So I've slowly come to appreciate the intensity of Mr. Market. To question 3, I had a plan before going in. I executed it, but I failed to account for potential concessions and wasn't flexible enough about the plan right at the start, and was probably a little too overzealous. Although I've pivoted at the start of this year and stopped averaging down, it might have been slightly too late because I could have probably conserved more cash and buy more at current depressed pricing. That said, to whom it may concern, I've recently added even more to my position again. So I'll keep you guys in the suspense for now so that you'll click into my next portfolio update. Now, it's looking like it's a really crazy bet to keep adding to China today. But that's my view and my own investment decision. Please exercise your own judgment and due diligence when you're watching all these different clowns on YouTube do their thing. So I'm not here to teach you what to do, and you should be consuming these videos purely for entertainment purposes. That said, I think there are many lessons that you can learn from many of these people that put themselves on the internet, myself included. And besides, it's free content anyway. Now, on the topic of what exactly is expected for investing in China for the coming 5 years, I've chanced upon this video by Eric Lee, who is a venture capitalist in China and also a political scientist, where he shared his views of how to invest in China. So just a disclaimer, he's extremely pro-China, and of course, you can claim that he's essentially just a mouthpiece for the CCP, or he's trying to spread propaganda on YouTube. but I think you should judge the merits of his argument on a standalone basis. So I'll play a short extract of his commentary.
Seems to be a lot of concerns about the Chinese economy and how geopolitics is affecting it. Let me today try to put it in larger context and take a longer view. The Chinese economy is transitioning toward a new development model. Now, this is driven by China's own national priorities, with or without geopolitical considerations. The current geopolitical tensions are accelerating this process and also at the same time adding risks to this process. Now, China's most important asset, both for its own economic future and for its position in the world, is its industrial capacity. China's industrial capacity is bigger than the US, Japan, Germany put together. We make everything for the world. But this capacity's value is still relatively too low. We've been doing better, of course. For instance, the iPhone, 10 years ago, only 3.5% of its value was created by China. Now it's more than 25%. But overall, our industrial capacity's value still has much room to grow. To improve, we need large-scale transformation of our industrial capacity so that it is enabled by technology, and also to build capacities in new industries, such as those sectors driven by low carbon emissions. China's entire industrial capacity probably generates between 5 to 10 trillion US dollars per year. Okay, 5 as industrial output and maybe 10 at the market endpoint. But the value add of this capacity is still below 20%. I would guess that our manufacturing generates perhaps 12 to 15% gross margin. This is too low. Higher quality development would have it generate maybe 30 to 40% gross margin. Now, on such a large base, this value increase would be enormous. Semiconductors alone probably accounts for 5 to 10 points. We spend nearly $500 billion US dollars importing semiconductor chips and related products. This is more than crude oil and iron ore combined. And we know China is the largest crude oil and iron ore importer in human history. Right? So China's national priority going forward is not to chase mere the quantity of GDP growth, but the quality. The current geopolitical tensions make this process a national imperative. It's now not just driven by economics, but by national security. In the next 10 years, there will be tremendous investment and growth opportunities, manufacturing technologies, supply chain optimization, artificial intelligence, semiconductors, life sciences, and medical equipment, new alternative energy like EV, and new materials. All this, I think, makes the West, particularly the US, feel threatened and insecure. And that's understandable. America sees its leadership position in technology innovation the bedrock of its global dominance. So they must compete. But perhaps because their political system is inefficient and their society is polarized at the moment, they seem to feel they're unable to compete effectively by improving their own national capabilities. So they resort to geopolitical tactics to weaken its rival. This adds significant risks to China's path forward. At the moment, pessimism abounds about the Chinese economy. COVID lockdowns, real estate bubble, big tech blues, geopolitics, you name it. But these are short-term challenges. Everybody faces short-term challenges. If not these, it will be something else. Okay, but longer term, I recommend that we refer to the 14th five-year plan. It sets specific goals for a broad range of sectors: manufacturing technology, AI, semiconductors, net zero, R&D, etc., etc. In the next 10, maybe 20 years, compared with the rest of the world, China would be the continent of stability and growth. Now, another key asset for China going forward in the future is political predictability. We know who will be in charge and what their policies will be. We certainly cannot say this about America or Europe now, perhaps not about anywhere else. I'm a businessman, I'm an investor. If there's one truism about investing in China, it's this: don't bet against the five-year plan.
So just some concluding thoughts before I end off this video. On the point of not betting against the 5-year plan, you can just quickly type into Google out China's 14th five-year plan, and there will be a myriad of analysis that were conducted dissecting the government's focus for the coming 5 years. Personally, I have two takeaways. Firstly, it is clear as day that they are prioritizing innovation and economic reform. So for whatever that it means, everyone can have a different definition of what innovation and industrial modernization mean to them. On the topic of economic and market reform, I think we are already well under some major restructuring over the last 2 years. So on top of that, some of the different buzzwords that are constantly used in the report include innovation, digital, opening up, security. So this is actually a stark contrast between the conventional portrayal of China elsewhere, where they want to be closed off, they want to decouple, they want to stifle innovation, and they want to kill big tech, isn't it? So I don't know about you, but that's at least my own personal interpretation. So if you don't believe that these big tech companies remains at the heart of China's innovation, then I guess I'll see you on the other side. So I'll end off this video with this Chinese saying, 成功系中取，富贵险中求. For my English viewers, the short translation is, being careful is the prerequisite for attaining success, while wealth is acquired in dangerous times. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!